Hey guys, welcome back to the Capital Mindset Show. We're going to be going over a different stock. The model's going to look a little different, and I want your guys' feedback as far as the color goes for the model. I changed up some of the colors, but it may look worse in your opinion or may look better in your opinion. Of course, I'm just trying to play around with some things to make sure it kind of looks better on the screen or makes it a little bit easier to read. Please give me some feedback. I thought the grays were a little bit, boring on the eyes, made you maybe perhaps a little bit sleepier. Some of you just listen to these videos, and quick announcement, I'm trying to look into the best way to actually convert this to just audio format, in the form of a podcast or something like that. I've had some requests in the past to try that out, and I'll see how that goes. If it's, of no extra inconvenience, I have no problem with turning it into that kind of file and just uploading it on any platform. Okay. So the company I'm going to actually be talking about today is I'm actually going to be covering several stocks today again, but right now in this video, I'm going to be going over 3M. All right. So 3M is actually a stock that I was hinting at that I'm starting to get really interested in. So in the previous video, a lot of you guessed this one, right? This is the big industrial one. And it's actually coming down a lot. You guys probably noticed it because it's on my watch list. And I'm going to go ahead and showcase the price action because, I think for the most part, everyone kind of knows because they were kind of guessing it and the price is coming down. So 3M's going through this glut right here, and it actually came down to a nice price point. It's not at the original price point, and I'll just tell you this. My wife does hold 3M, but she holds it at I'm really jealous of her price. And she acquired it during 2020, and that was a solid blue chip, but I want it for my portfolio too. So I'm hoping it gets down to there, but it has entered the nibble range, and actually I'll go over that with the actual model here. And again, some of you like these as shorter videos when I don't have to spend too much time, because I think for the most part, people understand that 3M or know this, that 3M actually produces about 60 something thousand SKUs or 50 something thousand SKUs. It's between 50 and 60,000 SKUs. And in that instance, that they are considered, a blue chip industrial. They are, slow and steady, boring company. But at certain times, depending on the price you can get, it actually yields interesting investment opportunities. So for example, in 2020, we were actually in this range right over here, actually slightly lower because the cash flows did actually come down, and they're estimated to jump right back up in 2022. So this is based off of 2020's cash flows, which were actually higher. We actually factored in a little bit of a decay, so a little bit lower growth than about 8%. So, but this is the longer term average for 3M. So I think, for example, this is the price I'm really interested in. Anything below $119, I will be buying a lot of 3M. So I'm going to be buying 3M a little bit after the making of this video and publishing of this video. And I'm going to be adding in, and it's going to be entered into the nibble range, right? And then if it gets below $135, that's when I start to bite. So we're not too far from there. And I haven't had a position in 3M until this day. Okay. So it hasn't been actually put into the portfolio. I'm beginning on this day to buy. And the date is 2/24/2022 for those of you who are future viewers. Okay. So I am implying a slight buyback or slight dedication to buyback. We do see that is a very conservative amount relative to the actual cash flows. So I'm assuming a 0.75% use case. Okay. And just so everyone understands, because I've had this question before, I'm not double counting the cash flows to buybacks. That is very interesting if you do that. It's just math at the end of the day, but I am actually pulling 10 years of data. And then I'm also utilizing a 10-year analysis. Okay. So that 10 is for 10 years of data. By the way, I'm still refining some of this. And again, criticisms have at it for the way the model looks. If the colors look terrible, I apologize in advance. All right, some of these features are back to working again, except for this one. The Coker is still not working, but the debt or equity heavy, we do know that they are debt heavy. That makes a lot of sense because they actually aren't issuing shares to raise capital. They're usually using debt. They do have a decent amount of debt, nothing too crazy for their size. Return on equity and return on invested capital. This is actually really good measure right here. And taking a look at the dividend, that's pretty well covered at this point. And the model is actually saying it's not at risk of bankruptcy within the next 3 years. Let's take a look at the key ratios to kind of get an idea of some of this. And again, some of this stuff is not yet functioning. Remember, we're in the transition mode for the model. So, if it's not reporting in, that's because, I haven't fixed it up yet. All right. So again, give me a couple weeks. And then liquidity ratios look pretty good. We're not going to take a ding on the cash ratio because cash ratio is a very conservative measure for the current ratios. As far as liquidity ratios go, the current ratio is pretty good. So this just implies that they have enough current assets to meet their current liabilities. Going down to the solvency ratios, we do see, stagnation here, but improvement since 2019. So they're improving the balance sheet. Long-term debt ratio is about the same, but again, improving since 2019. Long-term debt to capital, we're seeing the exact same story. Same thing since 2017, but better since 2019. All right. And then the exact same story for debt to equity. So basically what we're seeing as a story is 3M had a bump up in their balance sheet in terms of risk or leverage, and then now they're bringing that back down. I'd love to see that. Gross profit margin has declined since 2017. That's a negative sign. They're back to 2019 levels. I want to see that improve. We do know that we have inflation fears or supply chain fears. The producer price index has risen higher than the consumer price index. So we want to actually take note of that. And of course, 3M is passing with flying colors the earnings quality. As a blue chip business, I expect nothing less of them. Fantastic. Thank you very much. So I won't go over the activity ratios because they are incomplete. I think this one is the only one that's actually working, or not these ones. Some of these are working. Some of these are not working. So the cash conversion cycle is indicative of a very strong business. Okay, very powerful in their negotiating. All right, whoever they're dealing with. All right, so that's really good. Like it. So basically what I'm looking at is a blue chip industrial. This one is actually the one that's replacing Honeywell. For those of you who've seen the portfolio, you've noticed that Honeywell's on the chopping block. I'm taking my profits out of Honeywell. And unfortunately, Honeywell, and I've been selling out of Honeywell for a while now. So the portfolio has only been public on YouTube for not too long, but I've been trimming down Honeywell since it was in the 200s. But the way I exit positions is similar to the way I enter. I typically don't like to exit all at once unless there's, some crazy event. And I did mention this in a video that came out earlier today. It should be the first video. It's an announcement about Gazprom or Ukraine and Russia. So or Activision Blizzard's another one where I exited the complete position in one go, just simply, and I explained why in that video. All right. So pretty good. I like the prospects. Oh, I didn't even cover the analysts. So the analysts say it's a price target of 170, implying a 19.75% upside. They're probably having a little bit more aggressive estimations than I am, but I do like it. This one definitely going in. It's going to be reinvesting those dividends, letting the compounding effect to go to go at work. I'm going to be actually adding this one to my retirement accounts. So that's going to be the primary attack point in terms of adding this position. And I want to be adding this again in my retirement account because I want that dividend income to just be tax-free. I want to let it compound and do its thing tax-free. By the way, for those of you who don't know, I don't really make videos about this, but my personal preference is to have only the dividend stocks, personal preference, in the retirement accounts, and then the non-dividend stocks in the non-retirement accounts. And then I prefer not to sell any stock ever. So some stocks I've held for a really long time, and some stocks I hope to actually just never sell and just sell covered calls on them in the future and produce some form of income that way. And taking a look over here, because I know some of you actually wanted me to show this. This is one of the newer features, so we can kind of see the executive team, and then if their salaries or pay is actually disclosed, and then one currency. And if you guys care, their genders here too. So we do see that they're good, well compensated here. I'd say that we'd have to make sure that they're compensated in terms of their stock options well, but it's good to see this here. So you guys can just pause here and just take a look, and then whether or not you like it or not. And then you can see kind of like their age here. So if you have a youngster, usually with these kinds of companies, you're not gonna have a youngster managing the company. All right. So, and by the way, I didn't go over any of these stuff. I don't know if you guys were interested in that, but yeah, they have 95,000 employees. It's a huge company. Okay. And that's there. So taking a look at the sales are actually growing. So they actually are pricing costs in, or the inflation into the consumer, and but their cash flows need to catch up. Of course, this is just an estimation by analysts, so we don't really know if that's actually going to come through or not. And again, this revenue is also an estimation by analysts. All right, guys, on that note, I'll leave you there. That's my current thoughts on 3M. I'm buying 3M. It's in the nibble range. And I'll be hopefully adding at lower and lower prices. I'm really looking forward to adding this to the portfolio, and I'll leave you guys there. All right. If you guys like content like this, go ahead and feel free to leave a like. If you're new to the channel, go ahead and subscribe and see if your stock comes up that you're interested in, or, we're always covering different stocks here on the channel. And then hopefully the idea is, not just stocks that I'm buying, but stocks that you guys are actually requesting. And then we kind of broaden the reach, and maybe you hear about stocks you've never heard of. I may not be interested in them, but maybe I bring them to your attention and then you're interested in it, and then that's hopefully the idea. And then you guys can kind of share your thoughts as to what I cover on a stock, say, hey, you missed this, or next time talk about this, or maybe I didn't look at a certain risk. By the way, I actually want to talk about this because I almost forgot to talk about it. It's 3M is going right now through some lawsuits, and they're going over some various lawsuits regarding some earplugs. And there's I think several states have already ruled in favor and against them. So we'll kind of see how that weeds out. I do think, there will be some liabilities that 3M will have to pay. And that's, again, adding to the concerns why the stock price is coming down. So this is not risk-free investment by any stretch of the imagination. I want that to be very clear. And I just wanted to cover that risk so it doesn't look like a rosy picture. Oh, I'm just buying the stock. And in fact, that's actually why I'm demanding a lower price, where I would be in the gulp range. I want to be compensated for that risk that I'll be taking on. All right. But on that note, I hope you guys enjoyed the video, and I'll see you guys in the next one. Bye.